Well, your initial comment, though, I'd like to expand upon. You said, especially in the United States. It's not really the United States outperforming anymore. In fact, that hasn't happened for quite some time. The United States market had remarkable outperformance, really historically unprecedented almost, for the 10 years into about 2018 or 2020, where it outperformed foreign markets by hundreds of percentage points. I mean, the United States outperformed Europe and the global markets by more than double. But that stopped. A lot of people aren't aware of that. At Double Line, we follow the relative performance of global stock markets very carefully, and they've all done about the same. I mean, this year to date, the S&P, the Dow, the Nasdaq, they're about 10%. The Canadian stock market is up about 10%. A lot of stock markets are up about that same amount, and that's been the case. In fact, the United States stock market is very overvalued on virtually every metric that you look at versus foreign stock markets. One thing we like to look at is Dr. Shiller's CAPE ratio, cyclically adjusted PE ratio of stocks, and it's really off the charts, just as are almost all metrics of valuation in the U.S. stock market. Interestingly, the one thing that the U.S. stock market is not overvalued versus is the U.S. bond market. It's kind of ironic. Here we have record valuations by virtually all metrics of U.S. stocks, and when you compare, though, the yield on stocks to the yield on bonds, like the 10-year Treasury, it's actually below average versus historical valuations is the U.S. stock market. So that's one of the interesting wrinkles in all this is that the rate against which you discount cash flows, the Treasury bond rate is so low versus economic growth and versus inflation that the stock market on that one relative value measure doesn't look all that rich. And meanwhile, the U.S. stock market is very overvalued versus, I would say, Asian equities and even at this point, European equities, which I bought European equities in an asset allocation fund for my clients a couple of weeks ago, literally for the first time to add money to European stocks in really many years. I can't even remember when the last time I did it. And that's largely because I think the US dollar is almost certain to decline over the intermediate to long term. One of the things that drives the value of the US dollar, and it's very highly correlated to the value of the US dollar, is the direction of the twin deficits of the United States. The budget deficit, which, as I pointed out earlier, is absolutely, the only word for it is exploding. It's at levels that just blow your mind. And then there's the trade deficit, which is also growing very noticeably for the first time in several years. The U.S. trade deficit had been fairly well contained and was going sideways. It was still a deficit, but it wasn't expanding. But thanks to the endless stimulus checks that are going to American citizens, not surprisingly, our trade deficit is expanding at a fairly noticeable rate. That's because when you send borrowed money to consumers, some of them save it, some of them pay down their debt, but some of them consume. And when you send checks, you're not exactly expanding your productive capacity. As an economy, the United States is not expanding its productive capacity. It's just expanding its propensity and wherewithal to consume. So not surprisingly, who's benefiting from the stimulus? Well, it's China and Southeast Asia and our other significant trading partners who are getting a tremendous benefit. One thing that's really interesting that most people don't pay attention to is the price of shipping. Container ships coming from Asia, the price of shipping has gone up about 100% since the lockdown because there's so much demand with these stimulus checks for things that say made in China written on them. And the ships come over here, but they go back not full. In fact, some of them go back largely empty. And so when you ship to the United States, you've got to pay the round trip on the shipping costs. So when I said that year over year import prices are up 6.9%, that doesn't even include the increase in the cost of shipping. So there's a lot of places where you can see, potential inflation, going back to your first question. The one place where you might not see inflation so much ultimately is in parts of the wage economy, which is really critical. If you don't get broad-based wage inflation, Jay Powell might be right, and inflation might prove to be transitory. Capital gains taxes going up is obviously a negative. It adds to the already high PE ratio of the S&P 500 and other indices. Just becomes that much higher if you increase taxes, because obviously that comes out of the bottom line. And it seems clear to me that capital gains taxes are going up. I don't think they're going to make it up to the 28% that Biden is talking about. I think they probably go up to 25%, but they're going up. And meanwhile, other problems that exist in this tax proposal have to do with capital gains on those that make over $1 million would go up to the income tax level. That's a really big increase. capital gains taxes. That's basically a doubling of the capital gains tax. And one of the arguments, ironically, about this tax proposal is one of the reasons that they think that it's so-called fair is that the real punitive aspects of the income tax only falls on a small fraction of the society. So that's what they call fair these days. If it's not broad-based, I mean, to me, it's the opposite of fair. But at any rate, if you get 3% capital gains tax, that's a really big problem, and that's a huge headwind for the U.S. stock market. And taxes like that are really big tax increases on a tiny fraction of the population, they tend to be rather popular. I saw a poll just yesterday that said that something like 64% of Americans are in favor of raising the taxes on the high earners, which is almost always the case. So, of course, that's a headwind. Another huge headwind, of course, would be the wealth taxes that they're talking about. Those seem much less likely to pass to me. But those would be other issues that would greatly discourage small business investment.